UK consumer price inflation has hit its highest level since June 2014 at 1.8%, with petrol, diesel and food costs behind the uplift. This is mostly because of the impact of the lower pound, bringing in higher prices. The 1.8% reading is in line with most economists' forecasts and just 20 basis points below the Bank of England's target for inflation at 2%. Under normal circumstances, with inflation expected to rise further, the Bank of England will be looking at raising interest rates, but with poor wage growth numbers and higher prices squeezing household budgets and responsible for driving still relatively anemic growth, it's not expected that the BOE will be tempted to take rates back to pre-referendum levels of 0.5% anytime in the near future. So how do you trade this? Well, clearly it's all about sterling. Just want to take a look at one particular cross that we quite often look at, and it's a highly traded pair. This is sterling against the US dollar, and you can see quite clearly on this daily chart the way that today's trade has performed, just hitting the intraday recent lows that we've had around about this figure here at 124.64. We're currently trading 124.71, but the impetus out of these numbers is lower. Looking at some of the longer term support levels, we've got this point here which has been resistance and then support, which is 123.12. So if you think that sterling is going to go lower from this point, you put a stop around about this sort of level here at 127.40 just in case there is a reversal, and then you would be looking to trade down to this level here as a minimum price target. That being said, we've got the 100 and the 50 period moving average just below us, which will act as potential support. Looking at the daily chart, you can see this is the hourly chart. You can see quite clearly how the trade has gone today in the wake of these numbers. Weaker than expected. Nonetheless, it was a rise in inflation, but nonetheless a little bit weaker than had been expected. As a result, sterling taken down. And you can see now in this third hour, after the numbers are out, there is a little bit of a turnaround. All we're doing is we're seeing this RSI pull back from being oversold. But certainly, as I said, expectations are potentially that we've got more weakness to come in sterling, and that would keep us within this band that we've been trading in, with the support at 123.63.